JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 29th of September 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So you feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now jumping quickly into a few charts here. So the first one I want to pick up on is Nikkei 225. Now 225. Now I talked about this one yesterday, and basically what I was saying, guys, that if you want to aim for some higher levels, wait for at least a push above this 23,580 zone. So today we got a push, but as you can see, the bears kind of quickly drove this one back below it. So yes, we did create a new high for September, but as you can see, the daily candle kind of remained below this area. So in other words, this area right here, this level, this 23,580 zone, continues to provide decent resistance. So we need to see a nice good daily candle staying above that area, above this barrier, in order to get a little bit more comfortable with higher levels. Yes, the fact that it's still balancing above this upside support line taken from the low of the 31st of July, that's great, good news for the bulls, but just to be on the safe side, let's wait for that break here, another break, and we would prefer, like I said, to see that daily candle remaining, because what we got right now is just a false breakout, which, to be honest, doesn't really help here for the bulls. In terms of the downside, now previously I talked about this level here, the 23,040 zone. However, given that the index kind of already moved a little bit more to the upside, what we could keep an eye on here will be this level near the 23,273 zone, so approximately around there, or we can even say that this little range right here between these two levels, between the 23,300 and the 23,273. So yeah, if we get a drop below this, then there is a chance we could see the price falling below the 21-day EMA here as well, and the lower levels could be met. So that's why for now be very careful. Yes, we are closer to the barrier here, this resistance barrier. So yes, we are examining the upside. However, we need that daily candle remaining above this area in order to get a little bit more excited with higher levels. Jumping into Shanghai Composite now, this one is trading in the green so far. It still has a bit of time left until it closes today. So as you can see, this area right here, the one that I talked about previously, this 3,220 zone, continues to provide support, and yep, for now, in a way, previously I talked about this idea where if we get a strong move below this, then yes, further declines are possible, and my target could be here somewhere near this 3,181 zone. Not far, of course, but nevertheless a good possible target. So for now, you can see that there is a bit of recovery here, so maybe something like this could be possible here. We could see this one drifting a little bit higher, maybe finding resistance near the 21-day EMA or near this downside line taken from the high of the 31st of August. And if we do find resistance somewhere here, then yep, another round of selling could be possible. Unless it decides not to travel higher and starts drifting back below this 3,220 zone straight away, then yes, like I said, this level, the 3,181, is back on the table. It's still on the table, so is right now, but given that we saw a bit of a corrective move here this morning, then yep, there is a potential maybe for this one to maybe go a little bit higher here, test this area, and then maybe drop down. Now jumping into the German DAX, and look at the spectacular move here on the German index, and basically the price accelerated. And this is what I talked about yesterday, that if we get a nice good strong push above this 12,754 zone, then yes, we could consider maybe a move higher, but we'll be very careful near the near this 21-day EMA and near some of these levels higher. But again, as I said to you guys previously, that for now we need to be very careful. Yes, we are seeing a bit of a rally here to the upside, or should I say yesterday we saw a nice good rally here to the upside. Looking at the cash index right now and where the price is currently sitting at, it's basically near the same level at where it closed yesterday. So in other words, keep your eyes on this 21-day EMA, because it seems that this could act as a good resistance area for now. But again, if it pops above it and the price climbs above this 13,000 mark, then yes, we could start considering some higher levels. Another index, and this one is a dollar index, and this is the DXY here. Now my idea previously was that if we get a bit of a correction here from this downside line, which we are getting right now, there is a possibility for this index to drift lower, maybe towards this 93.81 zone here, which previously acted as a good area of resistance. So somewhere around here, if it drifts lower and finds support, then we could see a nice rebound and a push higher. However, still the same kind of idea remains, that we need a break of this downside line in order to aim for some higher levels. And given that we have shifted a little bit more to the right now, so in addition to that, a push above this 94.65 level could just do the trick for more buyers. So basically, if we get a break of this downside line, yes, that's great news. But if we also get a push above the 94.65 territory, now this is where it could become a little bit more interesting. In terms of the downside, yep, we need to see a drop below this 93.81 zone or this 21-day EMA. Jumping into gold, and gold is well, rebounded yesterday, so everything's working according to plan that I've mentioned to you guys yesterday, that if this 100-day EMA, shown as the green line, continues to provide support, and we see the price moving back above this 1877 territory, then there is a chance we could maybe see gold popping a little bit higher. And given that we saw the XY right now declining a little bit, then there is a chance for gold to move further north. However, as I mentioned to you guys previously, that we'll be very careful near this 1900 level, or 1900, 1901, 02 zones. So somewhere around here, if it provides resistance, then another round of selling here could be possible. Jumping into WTI oil, to be honest, not much is happening here. It's just stuck here, so I just want to quickly show you that we're still waiting for a break above this 41.46 zone in order to aim for higher levels. If we cannot get that, then yep, for now we'll just remain neutral. Even with the downside, we need to see a drop below this 38.74 territory right here in order to consider maybe a slightly lower levels, maybe going all the way here back to the lowest point of September. But again, for now, let me just grab this this one right here. For now, basically, we will remain neutral. Ethereum is well, it found resistance here yesterday near this 369 territory, slightly above this 21-day EMA, but eventually still the bulls we're not able to keep the daily candle above this 21-day EMA shown as the yellow line, and then now we're seeing a bit of a corrective move lower. Now this is exactly what I was talking about recently when I was covering Ethereum, and basically there is a possibility right now for this one to move lower a little bit, unless it pops above yesterday's high here near this 369 zone. If it does that, then yes, higher levels could be met, but for now there is a possibility to see a bit of another decline, and if so, then yes, keep your eyes on this upside support line taken from the low of the 13th of March. Now jumping into a few pairs, and quickly here the AED-JPY quick update. Yesterday I talked about this idea in my morning video, and for now it seems to be working out nicely. So what I was saying yesterday, that keep your eyes on a possible rebound, which happened, where the pair could travel back towards this 74.83 territory right here, which also coincides with the 100-day EMA. And as you can see, the pair did exactly that. Now the big question here is, will this other half of the scenario will work out or not? So for that to work out, we need to see a continued rejection of this pair near this level, and if it struggles to overcome the 74.83 territory, well, again, this is what I said that yesterday, that if you're a little bit more on the risky side, then yep, there's a possibility to maybe try to take advantage of the higher rate and then push this one lower. But that's for this pair. Now if we get a push above this area, above this 74.83 zone, and we see the daily candle remaining above this area today, well, I mean, maybe then the pair is willing to go for a bit of a larger correction to the upside, because again, we do have a bunch of obstacles, like for example this one right here, the 75.61 zone that I talked about previously, and the pair could travel towards that area, and probably by the time it could travel to this area, the 21-day EMA would approach this level as well, and could provide additional resistance. So that's why for now, be very careful here for now, because I'm still examining this potential idea, but like I said, let's see if the pair is able to climb above the 74.83 territory. If it doesn't, if it doesn't, then yes, then this move lower here could be possible. But if it does, keep your eyes on this 75.61 zone. USD JPY. So this one here is a bit of a tricky one. I mean, although it's a bit of a mess, I would say. I mean, right now it's a battle of the two safe havens, and so far here in this pair, US dollar is winning against its Japanese counterpart, and we can see that from the technical side, we can see that the rate continues to balance above this 105.30 zone, which is providing support, and of course some buyers could see this as a good opportunity to step in. And how we could play this one out right now is basically, given that the rate is also trading above this 21-day EMA, of course this creates a bit of bullishness here, but if you want to be a little bit more on the cautious side and the careful side, wait for a push above yesterday's high and the high of Friday, which is around the 105.70, and then yes, we could go slowly climbing higher here, maybe towards this 100-day EMA or this downside resistance line, and this downside resistance line is drawn from the high of the 24th of March. But if the pair struggles to overcome this 105.70 territory and shift back down, we will consider lower levels only on a drop below the 105.30 territory, and then yes, we could consider a further decline. But again, for now we're closer to this 105.70. Let's see if we can overcome it. GBP/NZD very quickly here. So as you can see, this barrier, this was my target. I talked about this one last week, this 1.9645 zone. So everything worked out perfectly. So we had a break of above this 1.9385. Great. It traveled higher, and it hit my target near this 1.96.45 territory. And it kind of got halted here, although yes, we saw yesterday a bit of a false breakout here, but as you can see, this is what the bears did, and they kind of brought the daily candle back below this area. There is a possibility we could see another test of this, and maybe the rate could stall this time somewhere around here, because this level also coincides with the 100-day EMA, not to mention it marks the lows here of 6th and 7th of August. So in a way, their rate could stall here for a little bit, but that said, if it actually overcomes it, then we'll start aiming for this 200-day EMA, which currently is roughly around 1.9733 zones. So yeah, approximately around here, guys. So keep your eyes on that one. Now, jumping into some of these exotic ones that I've mentioned to you guys last week and the week before that. So basically, Euro Ruble, you probably don't look at these very often, but basically I've mentioned those because Euro Ruble and Euro Turkish Lira here, these two, and as you can see, this pair continues to accelerate, and yep, the most important is that the pair managed to overcome the March high here nicely, and it overshot it, and not only overshot it, but also kept the daily candle above it, and not only above that level, but also above the previous high of September here near the 90.39 territory. As you can see, the pair created a new all-time high, not an all-time high, but a new high for September. And so far, it's going to be quite interesting to see if this can continue rallying, because the next target here for us could be this 93.69 zone, and that marks the highest point of 2016, guys. So a very good potential target. If you want to aim for something further, then well, we do have this this level right here. Let me just zoom in here to capture this one correctly. So the high is here 97.90 territory, guys. So wait, is that correct? Is that 97.90? That is correct. So so yeah, we'll keep an eye on that level. It could be quite interesting to see if we can actually reach that or not, but yep, that was the severe kind of devaluation of the Russian ruble, and well, I mean, let's see if we can actually get to that level. So somewhere near that 98 territory, basically. But again, for that, well, we need to see a Russian ruble here pushing kind of further north. Initially, like I said, we're going to be aiming for this highest point of 2016 and near the 93.69 zone. So keep your eyes on that one. Euro Turkish Lira here also drifting higher. Also, the Turkish Lira is heavily devalued against its European counterpart, and you can see that we managed to overcome this psychological 9 zone again, because initially it showed a weakness a little bit here. So this pair showed weakness and it drifted lower. However, it still remained above this 21-day EMA, and instead of kind of drifting below it, it popped above this psychological 9 zone again, and now it's currently trading around here. Now let's see where this if it's going to continue pushing further north, but to be honest, for now, that's the all-time high, and well, yesterday the pair created the all-time high, so let's see if it can create a new one today. But yeah, for now it's not really looking good here for the Turkish Lira against the its European counterpart. And finally, EURUSD. So here, still, I stick to the same idea that there's a possibility to see maybe this one kind of climbing a little bit higher here, going for a bit of a larger correction, but if it struggles to get back above this 1.1753 territory or this downside line, then, well, I mean, we could see another round of selling. For now, it's like I said, be very careful here, and if you want to look at some higher levels in the medium term, then, well, wait for a break of this downside line first. But again, for now, yes, from the very short-term perspective, there is a possibility for this one to move a little bit higher, but if it struggles to surpass all this resistance area right here, then another round of selling here could be possible. So guys, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time. I really do. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Stay safe, and yeah, I'll see you later. Thank you very much, and bye-bye.